And hello, South Florida. Hello to the rest of the real estate world listening to us out there. My name is Eric Wallner, and I'm your host, and we are ready for another live edition of the Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show, all about the topic of real estate. We're here this week talking about what's more important, equity or credit. I launched a little poll, a little questionnaire. And I'm going to leave it open one more day. It was very interesting to see sort of, one side, then the other side. It's fairly evenly balanced, to be quite honest. And what this is really all about is in the whole scope, in the overview of looking at home ownership or even real estate ownership as an investor. I wondered what people thought was the most important aspect first, almost like the chicken and the egg, or maybe it's just a matter of what concerns you the most because of your situation. Maybe it's because credit has been a problem, a challenge, either not having any credit, which, believe it or not, is worse than having bad credit. But both of those can be easily remedied if you know what to do. So I'm going to give out the text line. And if credit is what's most on your mind when it comes to real estate, what you think is the biggest obstacle, then I'm going to ask you to text the word credit. On the other hand, if down payment or getting the right price or even getting a price, we're going to call that equity, and that's the equity side. So it's credit and equity, credit or equity. And whichever one is the most important to you, I want you to text it to our smart line, which is going to be tallying and computing what is the most important thing. And I want to spend the next week after that talking about just that topic. And so just like yesterday, I had one article, I had a subject about credit, and I had another different article, a subject about equity. And so I'm going to kind of split the middle again this week. After all, today being Wednesday, our midweek report, usually what we'll do on a Wednesday is talk about what's going on in the news as it refers to what we're talking about here on the Real Estate Show. So whether it's over the last few weeks, we were talking about REOs and, the coming spike in foreclosures once they lift the eviction moratorium and the foreclosure moratorium. And right now we're still sort of in this gray area. The federal moratorium is officially off, but many states have taken it upon themselves. In fact, that was one of the headlines that I saw, that another state just extended there on a state level. And let's go back to that, on a state level to January 15th. So that's a pretty big deal. And so that's one aspect of it. And we talk about the iBuyers. We've been talking about the renters protection, landlording, and all these other different aspects. So every week, all of our shows, which remember, we're here 5 days a week, live at 5 p.m. and available and accessible 5 different ways. On the AM station, 1470. On the FM stations, a number of them, 95.3, 96.9 for starters. And you'll find whichever one of these stations that we're on the apps, like the iHeartRadio app, the TuneIn app. There's these a number of different apps that you can download, including the one from this station, WWNN. If you look in the Play Store or the App Store and search for WWNN, it'll come up as an app that you can download, and that's a direct link to this station. And you can hear this radio show if you're there live at 5. You can also, if everything else fails, just remember automaticlandlord.com. That's automaticlandlord.com. And by the way, thank you, Maleva, for pointing out that the appointment button, remember we just revamped and got a brand new website there at automaticlandlord.com. And the appointment button is missing. So we'll get on top of that. But that's the kind of feedback that really helps us out. Always appreciate any positive or even constructive criticism about the website, about the show, and everything else. And all of that you can do there at automaticlandlord.com. There's a dialog box that you can go there and send us a message or even place your vote, equity or credit. equity or credit. Then, so Tuesdays, we always talk about our tools, tips, and techniques. Wednesdays is our midweek report. And then tomorrow, we'll talk about the money. And, well, when you're talking about equity and credit, you're already talking about the money, aren't you? But we're gonna put that into a perspective. Now, back to what I was saying earlier, I wanted to pull up this headline. They were talking about house hunting. How do you calculate the value of a property? And that's something that you got to get good at in real estate, and something that I have become somewhat of an expert at. In fact, right now I'm serving as an expert witness on a case. In the cases where I am called in as an expert witness, it's usually to figure out weird valuations. Like there was one a few years ago where the condominium association took away a driveway parking spot, and they made it part of the common area instead of deeded to the unit as it originally was. And then that started a lawsuit that it devalued their property. And so how do you figure out, once you separate these little things and these components? And believe it or not, that lawsuit went on for years and years. It cost more than the parking lot was worth. Let me just say that much. But there's lots of different things going on right now with the bidding wars. And so there's an interesting article, and we're going to talk about that one in today's, house hunting. Is the price right? How do you know? Another interesting one from the opposite side of the country, from the Seattle Times: when paying $60,000 above asking price feels like a deal, right? How does that happen? Well, because in that area, when they're talking about the Silicon Valley, it was customary. Just imagine, we're talking already about very expensive homes. And I saw some cases where they bid the property 70% above asking price. So if you routinely go $100, $150, or $200,000 over asking price, paying only $60,000 over asking price could, in fact, seem like a bargain. It's always all relative. And so now, interestingly, go a little bit farther north in Seattle, the housing market seems to have cooled. That's been hot. Even when the market was not hot, Seattle market has been hot. The exodus of people leaving California but staying on the West Coast has really risen the values on that side of the country. And so I wanted to find that article that I was telling you about a little bit earlier, because how about this one? The most expensive home in America just defaulted on $165 million worth of debt and is heading for sale. But one thing that we're watching right now is mortgage demand. Mortgage demand, because rates have sort of stuck at where they are, and I'm going to talk about that in the second half of the program, where we're going to talk about the credit aspect, because that is definitely a credit conversation. Is mortgages your big concern? Not just your credit score, but how about how much credit you can get based on how much you make, how much you can put down if you have a down payment. But just remember one thing: you're listening to the Real Estate Show, and here we have said, I don't care whether you have a down payment or don't have a down payment. That is not what stops you from being able to buy a property. Whether you have income or not on your tax returns will not stop you. You got to show me that you can afford at least your rent payment, because then we can match something. It's oftentimes cheaper to buy than it is to rent in terms of monthly payments. And then again, it doesn't matter whether you have good credit or bad credit, because I can show you how to fix that. And as I said before, it's actually easier to fix bad credit than it is to create no credit. But both of them are something that we do here routinely and regularly, and we can help you with that. Now, yesterday, remember, we talked about how 48% of renters worry that they won't ever be able to buy a home. And we were talking about how that's impacting certain generations, the Gen Xers, the millennials that are, now in their peak career years, their peak earning years, And their concern is that between student loans and obligations and, being bid out at these multiple bid offers, that it's just not meant to be. And if you're serious and you really want to be a homeowner, then talk to us. But for now, what I really want to know is it equity or is it credit? Text either one of those words. Which one is either your vote for that topic or your biggest concern for that topic? Text it to 561-861-2366. That's 561-861-2366. And where else? Yesterday, of course, we talked about the climate change conversation. It was funny. And what becomes a national headline conversation last night on the news? Climate change. Just as I was kind of poking at that subject as an issue that that some folks say isn't being taken seriously enough when it comes to home buying decisions. Oh, that's what I wanted to talk about there. It's New York. New York just extended their eviction protection for renters. By the way, New York, an absolute nightmare place for landlords between rent control and the absolute tenant-leaning judicial system there. It's just if I were to be a landlord in any other state besides Florida, besides Texas, it would not be in New York, and probably not in California either at this point. But then again, with the exodus, there's more than one reason why not to do that. So let's jump in now into the equity conversation. And this is a conversation and from an article out of the New York Times that was actually talking about California, oddly enough. And the title of the article was "House Hunting, Is This Price Right?" Now, typically speaking, when you define the market value of a property in a normal market, in a normal situation, with, what I would call similar or homogeneous properties, the market value is what a ready, willing, and able buyer is willing to pay a ready, willing, and able seller. Now, the minute there's moratoriums and stresses and delinquencies, or any kind of duress, that of course skews it one way. When there's a shortage of supply and a high demand, it skews it the other way. And that's why you hear from time to time, you'll hear someone say that we're in a buyer's market. That means that the buyers have the upper hand because there's too much inventory, for example. Or as we are in now, a seller's market, because there's so much demand for the property. The seller doesn't have to worry about lots of contingencies. In fact, in many cases, he doesn't have to worry about any contingencies, not mortgage contingencies, not inspection contingencies, not closing date contingencies, etc. And what we like to see is somewhat of a balance between the two, but in every imbalance is an opportunity. And as an investor speaking now, this is where you have to understand where to go, where to get those deals. But the number one skill that you have to have is being able to figure out, is this price right? And so the article goes on to say that in parts of San Francisco, in the Bay Area in particular, the Silicon Valley, which is hot, sellers deliberately underprice homes to spur bidding wars. So they attract a bunch of people to come take a look at the house. And once they see the property and they see that there's a little bit of a contest, that they'll bid these properties up, which leads to sales prices that can be as high as double the listing price. So just imagine if in a hot market, and just picking a number out of the hat, that you have a $500,000 value house, and that would be an entry-level house, by the way, but you put it on the market for 400, everybody comes running thinking that it's a great deal. And next thing you know, what I call the auction frenzy, the euphoria that gets people all of a sudden more emotionally and less logically in tune. And now that property gets bid up to $600,000, $700,000, $800,000 because of the scarcity. So there's definitely an equity situation. Now, whoever buys that, and in most cases is going to have to pay the difference between what the bank will finance. And let's say the bank will finance 80% or 90% of the market value. So 500,000 times 90% would be $450,000. And normally he was be expecting to put $50,000 down, the 10%, but the bidding war took it up to 700,000. So 450 is going to come from the bank. The other, not 50, 250 has to come from the seller because they waived their ability to get out of the deal by waiving the financing contingency. So that's an issue. But here's the more important part. You want to make sure. Now, in some cases, and if you believe that this market is still going further, and we do believe so, I don't know about in some of these frenzy markets, but I think Florida, for example, still's got a way to go. I think Texas still a way to go. I think a number of different markets that haven't even really caught up to the pace at which this, de-urbanization, the move to, remote living, remote working has caught up with some of the outlying areas, and there's great deals in those places. And just one of the things that we watch very carefully is the cost per square foot in the area. So what you want to do is that you want to get an idea of what the general, what the recent sales are, and you can look at the high, the low. What is the cost per square foot? What is the cost per square foot in the high end of the low? Look at the average, or remember the difference between average and median. They are not the same thing. And then you can start governing your offers, because in general, we like to be able to buy and get equity on the day of closing. We want to have, if nothing else, the amount of equity that you put down, the down payment needs to be at least the equity into the property. And that's assuming that you're not upside down when you overbid a property. And this is where this becomes very, very important. Now, even better than that is and let's go back to a sane market where I bought a property that was a $500,000 property, but I was able to negotiate a 10%, let's call it a 20% discount. So I now bought it for $400,000, and I put my down payment there, 10% for $40,000. But because I also got $100,000 in equity for negotiating, finding a deal without the market, maybe accepting a property that needs a little bit of help. So I know that with $20,000, I can recapture and make it that $500,000 property. So all these little things that matter. And this is why this is an equity conversation. And understanding how to value properties is critical for both sides, equity or credit. But, right at the top of the article, they talk about this couple here, and they're sitting on their front porch in the picture. And they talk about Kim and Will put in an $850,000 offer on a Berkeley house that was listed for $799. Did they get the deal? No, they're sitting there. The house actually sold for $1.4 million. Listed $799, below market value, as they were saying in the market over there. And so this is the kind of thing that is challenging, especially in the hotter, more populated markets. We're going to go ahead and take a quick break here, a few words from our sponsors. When we come back, I want to jump over to the credit side of the conversation. But if equity is what you think is the hottest topic right now, text equity to 561-861-2366, or post it on our Facebook page if you're one of our Facebook watchers, or send it to us at automaticlandlord.com in the comments. We're going to tally this up at the end of the week, and that's what we're going to spend next week talking about. Will it be equity? Will it be credit? Will it be equity? We'll find out. But first, these words from our sponsors. See, here's an example. Let's see. Not a single name pops up. It's so inconsistent here on Facebook. I don't know what it's all about. Debating whether we should just move all of this over to YouTube. Maybe it's a little bit more consistent. What do you guys think? Last night's Inner Circle call was very, very interesting. What did you guys think? That was good. You know, I was just looking at this shirt about donating blood, and I've been receiving offers. They're even bidding up requests for blood donations. It's like the seats on an airplane when they start raising the offer for someone to give up their seat since they're overbooked. I think they're overbooked at the blood banks. And welcome back. For those of you just joining us here on the Real Estate Show, my name is Eric Woolner. I am the host here of America's longest running daily radio show about real estate, and South Florida's definitely #1 show about real estate. And today we've been asking the question, what's more important? Is it the equity, the down payment, the equity in the property, the price, or is it the credit, your credit score, your credit condition, the ability to pay, the financing options that are available? Those are the things. So we've been doing this poll for this week, and I said I'll give the results at the end of the week. Text the word equity or credit, whichever one you think is more important or higher priority, 561-861-2366. That's, again, text the word equity or credit, one of the two, to 561-861-2366, or message us on our website at Automatic Landlord, or put it into the chat on our Facebook page. Anyway, mortgage demand, here we are, hot market. Things are still going on. Prices are still going up, but mortgage demand falls to its lowest in 2 months as rates stagnate. So most of the people who could refinance did, and unless interest rates fall, and let's look at this, we're at 3% right now. Average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances means that they remained unchanged at 3.03%. So we're still at basically a 3% 30-year mortgage. Ladies and gentlemen, if you do not own a house, don't walk to your nearest bank or mortgage professional. And if you don't know what to do, or if you want to really find out how to do it right, then contact us. You can, in fact, then that would indicate that credit is the most important. Take advantage of that. Text the word credit to 561-861-2366, and we'll have a conversation about that. But applications to refinance a home fell 3% for the week, and they were 4% lower than a week ago. And purchase application volume was 18% lower than the same week. So the number fell 3%, the volume. So we're kind of seeing the smaller loans, kind of the leftovers, the slow pokes in the market. So don't miss out on this. That is an opportunity that is amazing. And in fact, if it's 3% for a 30-year mortgage, that means that a 15-year mortgage right now is in the twos. 2.6, 2.7, somewhere in that range. So the article in this case here, talking about credit now, mortgage rates appear to be stuck in a holding pattern, was the quote, giving borrowers no particular incentive to act, especially on refinances. And I'm just going to say that in the world, which, as you know, has become quite crazy lately, things can change on a dime. And so total mortgage application fell 2% last week with the previous week. And the Mortgage Bankers Association is saying that that's the lowest level since July. And as we now start rolling into the winter months where the real estate market slows down anyway, you can expect those numbers to continue to contract. So take advantage of this opportunity. That's what this radio show today was all about. It's our midweek report talking about the two most important things in every real estate buyer's mind. But which one is more important to you? Will you text the word credit, or will you text the word equity to 561-861-2366? Anyway, that's it for today. We'll be back again tomorrow on our ATM edition of the Real Estate Show, talking all about the money. Until then, this is your host, Eric Wilner, signing off. Drive safe, wash those hands, and make it a great day. Bye-bye. You think so, Phil? All right, my friend. Thank you. And based on anything in particular, or just that you see more people heading over to YouTube? Good to see you again, by the way, Phil. Lock that one down.